Hello and welcome to the marketplace. This is a new day and it's time to actually look at what is happening around your business and how it's going to impact your business activities here in Ghana. So we'll be looking at the trends and how investment is going to go. On the program today, Finance Minister Seth Terkper denies abandoning plans of going back to the international market to raise funds. All these and more we are looking at here. And also we'll be taking a new look at the newly passed Petroleum Exploration and the Production Bill 2016. What exactly does it mean to the oil and gas industry here in Ghana? All this and more here on the marketplace. You can stay interactive with us on Twitter. Our handle is Joy Business GH, and on Facebook we are at Joy Business. For more business stories, you can log on to myjoyonline.com/business. My name is John Kojo Amwako. Marketplace returns shortly after this break. You're welcome back. And the first story, the Finance Minister Seth Terkper says he has not abandoned plans of going back onto the international market to raise funds from investors. The Finance Minister disclosed this to the Daily Graphic after failing to raise the required amount during the last week Eurobond roadshow. There's more in the Business Desk report.
According to the finance minister, he just delayed raising the funds because government will not go out and borrow at any cost to refinance the 2007 Eurobond that will mature next year, adding that the exercise has not been scrapped, but the current position is to pause it. The minister in the interview noted that this should not be seen as a rejection of the country's bonds by investors. He further said government will not go to the market at all costs to issue the Eurobond because it is not under pressure to pay off investors that bought the country's 2007 Eurobond. The minister argues that government had challenges in raising the funds because the rate offered reflected more of the external developments than issues in the country.
Still staying a bit more with the IMF and the Bank of Ghana and also the Ministry of Finance. The IMF will in coming days be seeking some answers from government on the status of the country's program with that fund. This was after Parliament amended the laws to allow government to borrow from the central bank up to 5% of previous year's revenue. George Rafi has more in this report.
The IMF gave this indication in a response to an email sent to the fund in Washington, D.C. by Joy Business. This was after Parliament rejected proposals by the fund to give the necessary legal backing to government's decision to agree to a zero financing from the Bank of Ghana under the country's program with the IMF. But the fund in an email maintains that its staff would soon assess and discuss with authorities the possible implications for Ghana's program after amendment of the Bank of Ghana Act allowing the central bank to finance government. The Washington-based lender in an email, however, maintains that there's been a significant progress by authorities in eliminating regular financing from the Bank of Ghana. This is evident from the beginning of this year, as government has not received any funding from the Bank of Ghana, but maintains that this is critical that it continues, as it's an important feature to support the credibility and effectiveness of the inflation targeting framework of the Bank of Ghana, which is critical to the success of the 3-year program. For some economists, it is interesting that Parliament rejected IMF's proposal of zero financing. This is because there was a provision in the Ghana's program with the fund that still gave government a window of opportunity to borrow from the central bank in times of emergency, up to 2% of the previous year's revenue, but payable in 90 days. However, government, on the other hand, has insisted that it has no intention of borrowing from the Bank of Ghana despite the amendment to the Bank of Ghana Act. But if we are indeed guided by events of the past, then many will be watching government closely in the coming weeks, especially from August ending to September, because of the fact that the serious budget overruns in 2012 started around this time.
Now, moving away from financial matters, now let's take a look at the oil and gas industry. As Ghana's oil and gas industry now has a definite legal framework that will regulate and address some critical challenges in the exploitation of the country's oil and gas resources. The Petroleum Exploration and Production Bill 2016 was passed into law last Friday after over 7 years of being tabled in Parliament. Extensive consultation process now has also taken place. It now replaces the defunct Exploration and Production Law 1986, also known as PNDC Law 86, among others. The new law highlights some key principles, including the effective management and exploitation of petroleum resources, creating a conducive environment for investment, employment, and transparency, and the very critical issue of local content, among others. Joining us on phone to explore some of these areas of the law and what it really holds for industry is the chairperson of the Civil Society Platform for Oil and Gas, as well as member of PIAC, Dr. Steve Mantiao. Doc, you're welcome to the Marketplace.
Thank you.
Exactly. After a long period now, the bill is passed in Parliament. Very soon it will become law. After the discovery of the Jubilee field, somewhere around 2007, there's been over 21 fields discovered now in various degrees or various stages of exploration and exploitation. What exactly does this particular bill mean to the industry?
Not much, really. Not much. And that is why a lot of us have been very, very concerned, going by the principle that our laws do not take retroactive effect. What it means really is that it will only affect agreements and contracts that will be signed after the law has come into effect. And so not much. But then we say, well, better late than never, because we do have other fields that are coming up and new contracts that are yet to be approved by Parliament. So going forward, we are hoping that we'll be able to better regulate the activities in the upstream sector.
But from the way you're speaking, you seem not to be so happy about the passage of this particular bill, probably because it's not addressing a lot of the issues that probably looked at. Did you not make input into this particular bill?
Well, let me say that I've been part of the process since 2007. Indeed, I happen to have chaired the governance session of the first ever Oil for Development conference in Ghana, which was to set the tone for the development of the governance framework for the oil and gas sector. At that meeting, that was in February 2008, it was determined that PNDC Law 84, and let me again take this opportunity to make that correction, it's not 86, it's PNDC Law 84, passed in 1984. The Oil for Development Conference determined that that particular law was not fit for purpose and that it has been overtaken by developments in the industry, and therefore it needed to either be amended or replaced entirely. We did not do that and went into the political transition in 2009. Let me say also at the time, we had made some progress in developing a bill that will hopefully replace the PNDC Law 84. But because of the non-inclusive nature of the consultations leading to the finalization of that particular bill, the new government felt that it needed to study it further and make further changes and all that. So there was no true national ownership, and we went through the motion of revising the law. This particular law has been in and out of Parliament a few times, and I'm happy that finally we passed it. But let me say that it draws heavily on lessons from our, let's say, nearly 10 years of oil, intensive oil exploration and production at a commercial scale. First and foremost was a challenge that we had with Cosmos Energy over their liability for the spill of what was described as toxic mud in this operational area. You recall that Cosmos challenged us on the basis of our own law in terms of their liability or otherwise for the spill. Indeed, the PNDC Law 84 proved incompetent in resolving the matter. So even though at the end, Cosmos paid some compensation to Ghana, it was really more of its own magnanimity than a legal obligation on the company. Going forward in this new bill that has passed, we are quite explicit about who bears the ultimate liability for spill. And this goes by the principle of the polluter pays. So whoever spills is liable for the spill.
Okay,
so
Doc.
No doubt about that particular.
I appreciate that, but I'm sure we're going to look at that a bit later. I'm talking about the environmental issues and actually who pays for that. But currently, I'm more interested in the issues of transparency, which has been quite controversial here in Ghana insofar as our exploration and exploitation is concerned. What does this new law bring on board here insofar as exploration and the transparency of revenues and other areas of the oil and gas industry is concerned?
Well, two things. I think it is important to recognize that this new bill that has passed provides for opening up the contracting process. So now we're going to move away from this open door negotiated deal type to what we call the open competitive round, in which you parcel the various blocks for contracts and companies who are interested bid to competitively to actually obtain these blocks. It also provides for access to the contracts that are eventually negotiated, and I think it helps in ensuring that at least the contracts that we sign are ones that will deliver value for money to the ordinary Ghanaian, who by the fact that he's a Ghanaian is actually part of the owners of the resource.
Yes, I do know also that, for example, Brazil practices a particular law or this particular area or jurisdiction that you're talking about, where blocks are parceled and, of course, relevant stakeholders are brought in to develop them. What is the difference? Because at a point in time, we've been having this open system where whoever negotiates best get the best of the blocks. We do have that. So what is going to change basically? Are we going to have that block thing where we're going to develop, GNP is going to develop the blocks and then give it to investors, or probably investors will also come in with their money, develop it, and then move on. And then after that, we can also look at still on the issues of transparency, the consultation procedure or process between the ministry and the other stakeholders in the industry as well.
Right. I wish to observe that, first and foremost, the previous practice had not been very open. And it is also sometimes described as first come, first serve. You are interested in a block, you approach the ministry seeks technical advice from the GNPC. Now, that advice is provided by the Petroleum Commission, and then you move into negotiation. Government provides sets up its negotiation team, and you negotiate. This kind of approach exposes the decision makers, the policy makers, to corruption. People could actually approach the minister and get the minister to actually provide or blocks on concessional grounds. Let me say that there's a case in which Hess Petroleum, for instance, signed a contract in which royalty was assigned at 4%. When and 4%, let me also make the point that it's lower than the 5% that Jubilee partners are paying. We approached then Minister Otin Ejay to find out why the royalty for Hess Petroleum will be lowered after the Jubilee discovery. And we're told that indeed this government inherited 2% royalty. The question is, if it was possible to have obtained 4%, why did somebody negotiate for 2%? And I guess it's also because the whole process wasn't very open. And so while we're not looking in that direction, somebody managed to settle for 2%.
Okay.
The 4% that was eventually renegotiated by the current government, I would say, it falls short of the Jubilee 5%. But there's a very good explanation for that, because Hess Petroleum will be operating in ultra deep waters.
So in your opinion, you think this new law is going to be an antidote for those lapses in the old one? But then let's move on, Dr. Mantia, to actually look at the provisions in this new particular law with respect to the Petroleum Revenue Management Act here, or the management issues. Maybe in 30 seconds, what is new in this law that's going to actually help us get transparency and value for money from resources, especially financial resources emanating from oil and gas?
Well, from the Petroleum Revenue Management Law indeed has express provisions in respect of disclosures, and that in itself ensures that there is some openness and some probity in the way the revenues are generated and used. But you also note that the Petroleum Revenue Management Law deals primarily with only one link of the entire industry value chain, which is revenues. Now, the disclosure provisions that we have in the EMP law that has just been passed actually expands the frontiers of transparency into the contracting process, which means that you will have a lot of disclosures, you will have access to contracts, you'll be able to determine whether we got value for money in a contract that will henceforth be signed in the name of the good people of Ghana.
Okay.
But there are concerns with the arrangement.
All right.
Concerns are that there is a provision, and I want to believe it was passed. We haven't seen the final document that was passed, but while the document was in Parliament, we expressed concern about the provision that allows the Minister for Energy or Minister for Petroleum to overlook the outcome of a bidding round and to award the contract to any firm of the minister's choice.
Okay, Doc, we thank you very much here because this is a developing story or a document we want to actually analyze critically. So we're definitely going to come back to you again to look at the other aspect of it. But here, we want to actually link up with the Environmental Ministry to look at some aspect of the law as it stands because it's been a major issues here in Africa and of course in other jurisdictions which produces oil and gas also. So other major concerns in oil and gas exploration and production include oil spills and pollution, proper waste disposal and environmental and biodiversity protection. So all those and more we're looking at here. And we do also have somebody from the EPA, that's Environmental Protection Agency here in Ghana to look at that. If you can hear me, you're welcome to the marketplace, sir.
Thank you. And thank you for having me. And good afternoon to you and your listeners.
Good afternoon. And the issue is this, that what does this new law make of the various environmental infractions emanating from oil and gas industry?
Yeah, thank you again for the opportunity. Now, the new law actually directs all contractors, subcontractors, and even the National Oil Company, GNPC, to make sure they adhere to the environmental provisions that we have in the country. So in terms of everything that relates to the environment, the law refers them to us, the EPA. So they will have to get a permit from us, and we have to supervise the environmental aspect of their operations. So the law made it mandatory for anybody who wants to undertake oil and gas activity in Ghana to actually work with the EPA to have a permit and continue to also make sure that they do everything in accordance with the environmental provision.
Okay, this has been there. It's been the status quo because I do know your activities also from the mining sector. You've been in here already. But the oil and gas industry do also present some unique situation and circumstances involving complex chemicals and in its ways of polluting the environment. Do you have the capacity actually to look at this in all fairness and also look at who pays for what in the event there are spillages?
Yeah, in terms of capacity, I always say that you cannot say you have a full capacity. That is why you always have to develop.
How much of a capacity do you have as we speak, per the law?
Yes. As we speak, when you say how much, are you talking about, let's say, a rating like a 1 on 5 scale, a 1 on 10 scale?
Let's say 1 on 10.
1 on 10, we can say we have about 6. And
6.
Yes, and we are really far, let me say, far above average. But we do recognize that this is an industry that is not static; it's dynamic. So
Okay.
today you
Now
have,
let's look at your, sorry. Let's look at your capacity to sort of deal with waste and spillages. How is the new law backing you, and you also equipping yourself to deal with this? And like I did indicate earlier, whose responsibility is it to make payment for spillages in the event they do happen? Because we've known from Nigeria, even here in Ghana, several instances where communities affected by some of these spillages, at the end of the day, lost everything, but they did not get anything out of it.
From the onset, the responsibility of any spill is on the shoulders of the operator. So the operator is totally liable for any of those spills that might emanate from their operation, and the law is clear on that one. And let me say also that apart from this EMP bill, the EMP bill which has been passed into law is the general framework within which the operators work. It is more towards the resource management and other things than being specific on environmental provisions. But then, as I said, there are broad policy guidelines for the operators to follow. But when it comes to the nitty-gritty, like the nitty-gritty of the law is that is the responsibility.
It looks like your line is breaking, so probably we have to end it here. I'm sure we're going to come back to you to explore further this particular subject in relation to your side of the story, especially the environmental aspect of it. Thank you very much, Mr. Avano Efunam, who is with the Environmental Protection Agency, the petroleum side of it. Now, we're taking a short break. We are back with more here on The Marketplace. You're welcome back, and this is The Marketplace. You can stay interactive with us. Our Twitter handle is JoyBusinessGH, and on Facebook we are at Joy Business. For more, you can log on to myjoyonline.com/business. Now, time to go across Ghana and also outside Ghana to look at how the markets are faring, especially the commodities and your investment in the equities market here in Ghana. Now, we're starting from Johannesburg, where the FTSE/JSE All-Share Index recorded some appreciation of 123.87 points and able to reduce marginally the year-on-year performance of it to negative 0.89% per annum. Now, moving on to the largest economy in Africa here, Nigeria, which also recorded some appreciation of 63.68 and still running almost 3.11 negative insofar as the year-on-year performance is concerned. So quite an impressive performance. A lot of Nigerian companies are also having some difficulty challenges to do with electricity and currency matters. Now, moving on to Egypt, and EGX Top 30 Index also recorded some marginal appreciation of 150.75 points and is still running the highest in terms of return, positive 17.83% per annum. Now, we'll be looking at the Moroccan All-Share Index in Morocco, which recorded some depreciation of 30.76 points and is currently the second highest gainer on the market, returning positive 10.81% per annum. Now, we're looking at in Nairobi, the Nairobi All-Share Index in Kenya also declined by 1.90 and is currently recording 1.59 in terms of the year-on-year performance. Still moving on here in Africa on the marketplace, Tunisian Tunisex also recorded or increased or improved marginally by 19.19 and is closing at 6.08% per annum in the positive. Now, Ghana, our own market, recovering very fast for the past 3 weeks, is improved marginally by 1.55 and recording 10.11 in the negative insofar as the year-on-year performance is concerned. Now, the Bourse Regional de Valeur Mobilier, which is the Francophone index, also declined by 1.59 and recording negative 5.33% per annum. Finally, Mauritius's Semidex also grew by 24.94 and recording positive 1.91% per annum. A lot of the African market recovering very, very fast there. So for you investors, you need to look out there in the event you want to do some transnational markets and other investment planning there. You need to look at that. And coming to Ghana, these were the summary of the market as at close of Friday. The market recorded an average of about 619,000 513 as against 90,262 in terms of volume at a total value of about 4,533,978,000. That's exactly, that was able to bring market cap marginally up to about 54,635.30 million. And that brought composite index to about 9.69 in the negatives. And the financial index also inched marginally lower to 12.51. Now we're moving on to the commodity market to look at how your commodities, the cocoa, the gold, and the crude is also performing. Now, before we came to studio, crude oil was trading around $45.06 per barrel after gaining 79 cents per barrel. And gold, the gainer of the moment, is recording $1,333.56 per ounce after gaining $1.85. And cocoa gained 1 cent and currently trading around 3,029. So now, briefly, just in some few seconds, let's look at the Ghana cedi and how it's faring against the top 5 major trading currencies here in Ghana. Against the US dollar, the cedi really did very well. It's doing very well. Gained against the British pound, gained against the euro, gained against the Chinese yuan, but unfortunately lost against the CFA franc. So, but for the CFA franc, 1 cedi will cost you 3 Ghana cedi 94, 1 British pound, 5 Ghana cedi 15, 4 Ghana cedi 37, and will give you 1 euro, and of course 59 pesos will get you 1 Chinese yuan, and 150 CFA franc will get you 1 Ghana cedi. That's exactly how the markets are faring here in Ghana and across Ghana to other African countries, Nigeria here. So that's where we bring to a close today's edition of the Marketplace. This is how your markets are also faring. My name is John Kojo Amoako, but you can keep your feedback and others coming in. Our Twitter handle is Joy Business GH, and on Facebook we are at Joy Business. For more business stories, you can log on to myjoyonline.com/business. Have a very wonderful afternoon. My name is John Kojo Amoako.